just give it like one more minute and then we'll get going.
No problem.
Pull up the presentation and we'll go through probably, like we said, about 20 minutes or so of talking and going through it. And then we'll leave some time at the end for Q&A.
Perfect. And are you gonna kind of watch the chat to see if, let's see here. All panelists and attendees, okay. Ah, perfect. Awesome. So we'll kind of watch the chat for some, I've got a notepad too for some questions, and I've got my questions as well.
I bet you have a lot of questions that probably span the different things that are asked over the, many calls you've had recently. So let's go ahead and get started. I'm going to let Chris Livermore give a little overview of his background. This presentation was organized by the Commercial Real Estate Professionals Network in San Francisco. Many of the members are on this as well as their guests. And this is being recorded, so maybe you're seeing this on a recording as well. But our guest today is Chris Livermore. And Chris, I'll let you take it and then go through an overview and let me know when you want to go ahead and pop the slide deck up, the short slide deck up.
Awesome. Thank you, Eric. And welcome, everyone. I appreciate you guys taking a moment out of your day to learn a little bit more about the CARES Act and how that's affecting small businesses. I'll give you a little bit of background on myself and Lumiere. I have worked with small businesses for probably 7 years now after leaving a career in finance and technology. And I've had the pleasure of working with over 150 small businesses during this time across 2 firms that I've grown. I currently work with startups, technology companies, nonprofits, some developers, and quite a few restaurants. And at the moment, within my portfolio of clients, I'm working with 20 companies right now that are impacted by this COVID-19. We've laid off over 300 employees, and we're currently in process. We've actually received within my portfolio, 150,000 out of $1.2 million that of EIDL loans. And we've got over $2 million of PPP applications currently across about 6 organizations. So with that, I just wanted to give, I've been talking with my friends and clients about the PPP and the EIDL program, and talking with Eric and Stephen. They thought it'd be beneficial to bring some people up to speed. I'm sure your inboxes are being inundated with this information, so I've tried to keep it really brief and kind of a primer. So apologies if some of this is redundant, but hopefully it's at least beneficial. So let's go to the first slide. I don't know if you've been following, but the CARES Act was passed unanimously on March 27th. It was quickly approved. It was quite a bit of money that was provided to try to juice the economy. Obviously elements across banking, mortgage banking, and a number of industries, but really what we're focusing on here is the next slide, which is how it's affecting small businesses. So there were really 2 elements that were carved out of the CARES Act to help small businesses: the Paycheck Protection Program and the EIDL, or Emergency Injury Disaster Loan. When the government looked to see how they could effectuate this, they had really 2 mechanisms for getting money out to the country. One was the IRS and the other was the SBA. They chose the SBA mainly because of the underwriting and the facilities there. I think what they didn't anticipate was the lack of resources to really work with the SBA. And that's really been most of the hassle and the issues that we've seen over the past week or so. Like I said, this was passed on March 27th. They came out with additional clarifications on April 2nd. They were supposed to accept loan applications on Friday, April 3rd. A lot of banks, after getting clarification the night before, put their programs on hold. The SBA came back on the 6th with even more information. And we think that most of the applications are going to be really starting to be processed tomorrow, this Friday. So the two programs, the PPP, they're definitely different programs, right? So let's start with the EIDL, and I'll touch on that real quickly. The most of this presentation's on the PPP. The EIDL is really just a carve out of the existing SBA loan process. They did a couple things. They removed the personal guarantee for monies below $300,000, and they streamlined the application and the processing of that. They also added a $10,000 grant. So the EIDL, you can go to sba.gov. You can fill out a little 5-page questionnaire kind of application. It asks you for the ownership, revenue, cost of goods sold of your entity, and then asks you at the end too if you want to elect for the $10,000 grant. So it's a great program. I recommend that everybody that is affected by this at least goes for the $10,000 grant, and we'll talk about how that conflicts with the PPP. The PPP is designed to get money out and get people back employed and get payroll checks flowing. So it is a flow of payroll out to small businesses, nonprofits, and self-employed individuals, which is equal to about 2.5 times kind of what a qualified payroll is. It does have a 6 months deferral on payment. Interest does accrue during that time, but it's at or around 1%. There's no personal guarantee on the PPP as well. So let's go to the next slide. So really, you know, the hardest thing with the PPP is really trying to figure out how to get off of Go. And so I put together just kind of a real simple number of steps that needs to be done. These really don't vary regardless of what lender you might be working with, but the documentation or the application might be slightly different. But really what you do is you go in and determine eligibility. So there's some information, we'll talk about that, and what loan size you're eligible for as well. So there's a process there. You have to gather required documentation. A lot of that documentation you actually can grab when you're doing the first step. You select a lender, and I parenthesize that to lenders or applications, because what I'm seeing is we're working with multiple lenders for each entity and looking to see who has the bandwidth and who can get us in front of the SBA first. After receiving funding, there is an element of the PPP that's forgivable. So there's some reports and processes to track forgivable spending. You have to apply for it. And then anything that's not forgiven, you go into a repayment plan. Let's go to the next slide. So this is probably old news for everybody, but I'm just going to rattle through it because there's some idiosyncrasies in here. This is really destined for small businesses. That is not limited to any type of entity. C Corps, S Corps, nonprofits, LLPs, LLCs, self-employed individuals, franchises are all eligible here. And really what determines eligibility is both employees and revenue. So for most industries, the eligibility is this under 500 employees, and that's what most people heard. But if you really dig into it, they do, and they've clarified and allowed the SBA size standards to be used for revenue for a number of industries. And that's very interesting. For restaurants that have more than 500 across multiple locations, they cap the revenue at 8 million, construction 39.5, and contractors 16.5. So just some interesting ones. I've got a link at the end of this presentation that gives you all of those industry, whether it's a employee or revenue amount. The business has to be operational. So if someone shuttered their business as of February 15th, they can't qualify for this. And the next one's really important. You do have to certify that you are impacted by COVID-19 and that this loan is necessary to support ongoing operations. That's pretty critical. There's a lot of wording across all of the guidance that they're going to be enforcing this, and they're really looking for fraud and fraudulent activity. So we have to be careful on that. And then there's probably about a dozen other requirements around use of funds, but some of the more important ones are that it's not an illegal activity. you're not currently delinquent on another loan, you're current on payroll taxes, and there's some qualifications around having existing EIDL loans. So if you've already applied and received an EIDL loan, it's a slightly different process. How much can you borrow? So this was probably the area of the most confusion. The wording of the original CARES Act, the clarification on April 2nd, and even on the 6th has been interpreted many different ways. If you're working with one of your payroll providers, you'll see that the reports that they've been providing have changed almost every day. Really what was the question was employer paid FICA was the biggest issue, and then whether or not contractors were covered. But essentially, most of your payroll providers can produce a report that caps compensation at $100,000, takes an average 12-month of that, and then whether or not you're using a PEO or paying healthcare through your payroll or independently, you can add on healthcare to that report if necessary, retirement benefits. And then state or local taxes are pretty small. It's a small, less than 1% of the total compensation amount, but that is included. So that determines your borrowing ability. Next slide really talks about that documentation. And I've got the links to this on the end of this presentation as well as most of the stuff will be provided by the lenders that you work with. But the biggest requirement across all of them is this paycheck application, the PPP application and good faith certification. It's very simple. You do need to know the ownership percentages of the entity. They look for home addresses, social security numbers, and then there's questions around ownership or other entities that you might be involved in. There is a payroll requirement. So what most people are requiring on the application is the 940, sorry, I say 940 and 941. So we want the entire 2019 941 that substantiates the gross payroll amount prior to that $100,000 cap. And then the Q1 940 shows that you're still making payments and you're still in business. You also have to have any information if you did qualify or receive any EIDL funds. And then each SBA lender has a different loan requirement. Some of them are asking for tax returns, even though most of those haven't been done. And a few other documents are being requested. Sorry. Go to the next slide. So one of the best things about this PPP program is they are waiving or forgiving up to 75%, forgiving the loan balance as long as you use up to 75% of that on payroll. And this has the same criteria as the qualification. You can't pay somebody over $100,000. But you can use up to 75% of that for payroll and the other elements for rent, utilities, and some other mortgage interest. The key thing here is that they're looking currently, the current wording says that you have to use that within 8 weeks of receiving it. So we think that this is going to be a relatively difficult task for most of the companies because they are not going to necessarily get up to their full staffing by June 30th. Now, that repayment, there's a couple other calculations. One is around FTE, so actual headcount, and then also around the salary amount. So once we do get these funds and get more clarification around this, I anticipate that the forgiveness might be extended or they might lump on an additional payment if business closures for non-essential workers extends through this period. And it's very hard for companies to spend that within the 8-week period. Some additional details. Next slide. So there's, every entity, every company's different. I've got companies that spin up in the summer. I've got companies that have just started. They did clarify and switch from a 2019 average payroll to a trailing 12-month, but they also carve out some examples where you can use seasonal to determine. So let's say you've got a client or you hire staff up for a summer event, or I've got an events production company that does weddings, and they spend 100,000 a month for 4 months on payroll. So we can use the 100,000 as the average payroll rather than, closer to 35 or 40 if you were to annualize it. If you do have an EIDL loan, the funds that you used towards the forgivable amounts for the EIDL loan can roll over into the PPP. So there's still a lot of questions around this, but they are allowing that. So when you fill out the form for the PPP, they're asking you both to add the balance of what EIDL funds you might have received, and then there's this process to carve out and basically refinance the EIDL into a PPP. Couple other questions here. And the biggest question that I get from my clients is around the FTE and the salary. And the one thing that I can't answer, but I'll throw it out there, is the ability for a company to either pay the principal and or family members. So maybe a spouse might be out of work and they're coming over to the business to help out with it. We haven't seen any clarification on who the individuals are. A lot of businesses that might have furloughed or laid off employees, those employees have found other jobs. So it's practically impossible to hire the same individuals back, but clarification around the FTE count and use of individual family members for that is still unknown. Other element here is how they're treating small, sole proprietorships, independent contractors. They initially delayed the loan applications for those types of individuals out a week. We're now within that time frame. And so if you've got someone, maybe a spouse or a friend that's self-employed, or if you're self-employed, that same cap of 100,000 applies. So you take 100,000 of compensation that you might be getting as a 1099 MISC or independent contractor. The average monthly compensation is $8,333. So you can apply for $20,833, or 2.5 times that. Instead of showing a 940 and a 941, you submit the 1099 MISCs that you have that support that $100,000 of compensation. So that's the PPP program. I've added to this some details on the EIDL. The difference here, the PPP, as we said, is 10 million or 2.5 times payroll. The EIDL goes up to 2 million, and that amount's really determined by the SBA. So with the EIDL program, sorry, next slide, Eric.
Okay.
With the EIDL program, you apply directly to the SBA.gov. And with that application, like I said, you make sure you check the $10,000 grant that they say they're going to give you within 3 days. I haven't seen that yet. But you go into the queue to work with a loan officer with the SBA. The interest rate's higher. It's 3.75 for small businesses, slightly lower for nonprofits. And there's anywhere from a 20 to a 30-year loan term with no prepayment penalty, no personal guarantee for anything under 200,000. So it's definitely a mechanism. Number of companies that we had that were, found their access to the capital markets, either working capital or even just startup funding dry up. We've put them through this process. That loan repayment there's a delay, but each repayment period is slightly different. And like I said, you can use these, the EIDL loan under the disaster recovery for payroll for your employees, sick pay, including increased costs. So if your supply chain's been disrupted and you're paying more and your cost of goods sold is higher, you can earmark funds for that as well. and also rent, mortgage, and utility payments. So the EIDL loan is definitely an option. It is a lower amount. Like I said, we've filed for about 1.2 million of EIDL loans across a number of entities, and actually already been approved and received funding for one of them. So it was a relatively quick process. Go to the next slide. I'll just show you some resources. We'll send this presentation out. So what I've done here is I've kind of summarized most of the resources that are out there, the application, the guidance that came out thereafter from the SBA. I referenced the small business size standards to determine if you're revenue or FTE based, and then some additional guidance from the Treasury, including an FAQ and another information sheet. So there's some resources that you can kind of utilize in this. And of course, if I can be a help, I'm happy to be a resource for anyone that's looking for more information.
Let's do this, Chris. I'm going to exit out of the screen share, and let's take a look at if anybody has any questions specifically. You can either raise your hand or go ahead and type those in. It looks like Wayne had a question about, one slide said 200,000, the other 300,000. I think that was in reference to the EIDL, right?
Yeah, the EIDL, now they've gone back and forth on that. The number I have is 200,000, so I might've been wrong. A number of these things like the interest rates and the loan amounts, they've changed from day to day. This is definitely a moving target.
Right.
Yeah.
In thinking about some other questions, I know we talked about it before. What are some of the challenges that people are having in getting these loans, getting lined up for these loans that can be useful to many of the people on this call?
Yeah, I would say, the biggest challenge, I think, there's so much information out. What I've given you is pretty readily available, though I find every day that someone doesn't, is missing one element, one bit of information. So information's available. Really what we've seen is the hardest thing has been just getting lenders to work. I think that the necessary clarification scared a lot of lenders and stopped a lot of programs. I'm sure you heard a lot about that. The lack of resources within the lending community, and as even some caps on the ability for some of the lenders to borrow have been the biggest issue. What I recommend doing is working initially with your primary business banking relationship, whether that's a big bank, a private bank, or a credit union or a smaller bank. They're going to be the one that's most responsive and has a lot of your information already. And most banks are restricting to working with existing relationships. If you're not getting success there, then there's a number of other independent banks or other financing companies that have pivoted to support the SBA process. Lendio's one, Fundera, Flora Financial, Liberty. There's a number of companies that I can point you to. The lending banks are, I think you saw there's no origination fees. The origination fees are being paid by the government to the institutions that are helping with the application process. So there is an incentive for people to get this done.
I see a question. Hi, Trish. I see your question about when does the PPP clock start ticking? Is that as soon as they get the first dollar?
Yeah, you've got 8 weeks after getting the funding, really, is when it starts ticking. And First Republic has been very responsive. I put them it was one of the better institutions. There's a number of institutions that are doing this very well. First Republic is one of them, and I would assume you're going to hear from First Republic or from the loan officers as those applications are submitted.
Okay.
Yeah.
What are some other things that people should do if they've submitted their application and they're waiting? What's the timeline? What if you don't even hear from your bank?
Yeah, that's why I recommend. I've applied for each of these entities with upwards of 3 different partners for the SBA program. And our strategy has been to get those applications out and go with whoever gets you in front of an SBA loan officer first. So I would say that's the case. We don't have a lot of transparency into what's going on behind the scenes in the banks. What we have seen is that everyone is handling it different. Some banks are gathering just an expression of interest, they're calling it, and then you're dripping a little bit of information each day. One of the banks opened up for expressions of interest last week, and then as of this week, we're getting communication that we're in queue, and then as early as this morning, a request for EIN and a little bit of additional information. Other banks have opened up very robust document collection processes, including ability to sign applications and provide the payroll reports. And other banks have actually completely digitized the process using tools like DocuSign to get information in. So, what I don't know is how they're interfacing with the SBA. I know the SBA has had issues with their site. They're working with Amazon, AWS to increase functionality. So yeah, biggest issue we've seen is one, identifying and getting someone to respond. And then the next is really the uncertainty after you've submitted that application and hearing anything from the SBA. Supposedly, it's a week and a half thereafter to get approved, and then maybe upwards of 2 to 3 days to get funding.
Can you restate again those, you mentioned, I think it was 4 financial institutions that people could go to if their bank is not responsive and have a bank that's involved in this. Can you just restate those?
Yeah, so sorry, like what the different groups are, or what those?
You mentioned Liberty. I actually didn't write it down either, but there were 4, I think, institutions you mentioned.
Yeah, the ones that have popped up as being kind of, best of breed that we've seen, Flora Financial, Lendio.
Flora.
Yeah, that's right. It's FORA. What I'll do is I will add some links to this deck when we send it out. And Lendio and a bank called Liberty, SPF. It's out of East Coast in LA.
Okay.
So Fora, FORA financial.com, Lendio, and then a company called Fundera. So that's 4 that we've worked with. I'm sure there's others. If you work with a wealth management firm, there's been a number of businesses that have popped up to support wealth management clientele. So people are looking at different verticals for support. So I've had a couple clients that their wealth managers have opened up a lending portal through a partner, which would be an SBA partner bank. So we've seen that as well. When do we hear about the $10,000 grant and the EIDL loan? Good question, Stephen. We have not heard anything. The initial kind of direction was that you'd have the money in 3 days for the $10,000 grant. Most of my clients, we filed these things back on the 2nd and the 3rd, so we've not seen the 10,000 come in. Jamie, you've got a question about laying off people afterwards. There is a requirement through June 30th that you keep staffing levels. So I think there will be changes around that depending on how this pandemic plays out. But as of right now, that's where the FTE and payroll ratios through June 30th apply to the forgiveness amount. Sorry, Trish, you also said the Wells Fargo issue. Yeah, Wells Fargo did have an issue initially on Saturday. They opened up their portal. They were the ones that accepted these expressions of interest. They did resolve the loan cap issue with the Fed. They reopened, I think, yesterday. It's still the same process of submitting an expression of interest and getting into their queue. But I have seen they are communicating with customers. Stephen, you ask the next 250 billion. Keep your eyes on the TV. They're fighting that out right now. You know, as a small business owner and supporter, we're just hoping that the next phase or the additional monies do not become politicized. Really, what's going to happen, or we're seeing this happen, is saw it with the third stimulus act, that it's just becoming a political issue. So, you know, we're hoping those are some hip fakes going into the vote, but this last $251 billion is currently on hold at the moment. But like I said, these things change every hour.
You know, a question that I have is, what about, is any of what we're seeing in the headlines from the Federal Reserve, how will that affect small business and even big businesses' ability to get loans, or is that just a liquidity provision?
Yeah, you know, I don't have a lot of information on that. I think there's a number of elements in the CARES Act around like bank leverage ratios, obviously the GSE stuff. So yeah, I think they haven't really fully considered that. I mean, when they went after this first provision, they were going after people that were laid off. So there was provisions around extending unemployment benefits, right? And other elements, but there's a whole aspect of our economy that hasn't been considered. Underbanked, people that are social economically disadvantaged. You also have Medicare, medical professionals, dentists. I mean, this is really hits across almost every single industry. And those just haven't been addressed yet.
How much money do you think they'll need? Right. I mean, 250.
Yeah.
Maybe that 600. Is it, I mean, is that enough?
You know, that's a good question. I have not even, that would be an interesting math exercise. I know, I'll tell you this, what they've offered is not enough. I mean, the fact that they have the initial CARES Act funding, you know, they had 350 billion for payroll. I think they're going through that, and that's the big risk, is just that's running out. So I think it's hundreds of billions that we're looking at.
And then just thinking about the blocking and tackling, is it known, or is it a black box, how you have, for example, a big institution like Wells Fargo or another one like it, that do they get a prorated amount of the 350 billion because of their size or the amount of loans that they submit, or is it first come, first serve? And if a small, tiny bank in Wichita gets it in first, are they filled, and then everything else is just, how does that work, or is that even known?
It's not known. The assumption is that it's first come, first serve. There was some caps, and those were more of these lending caps that the big banks had. What we're, you know, that's the $1 million question. Is it better to go with the big bank that might have a little bit more power, resources behind it, or is it better to go with the small bank that's more responsive? I think it's a bank that's more responsive, personally. I have spoken with SBA loan officials. I mean, if you think about this, this is it's a customer, SBA organization is, I mean, the phone calls, you're dealing with a call center. SBA resources themselves don't have the answers. A lot of the questions are, you know, that people are calling in to the SBA are around the contractor, independent, you know, need for tax returns, and they just don't know the answers. I think you're better served with a smaller bank that has a stronger resource to work through that process than a larger bank that might be using a weaker resource to manage a weaker resource. That would be my thoughts.
Right. So, here's another question coming in.
Stephen, yeah, a trillion. Yeah, I read that as well. You know, the thought is, obviously with the EIDL, it's no different than printing money, right? They're just creating debt. There is a small element that can be waived because of the PPP. But yeah, you know, fundamentally, the PPP is really just putting money back into the GDP. And you would think that, you know, it would work. 1 trillion broken into small tranches. and phased out, I think would have been better, because I think the thought that this is going to be better in 8 weeks and people are going to be back to work, you know, is a little far-fetched. So I think the hangover of this pandemic will last longer for businesses.
Okay.
So Tricia, the question was, or it was a comment that Stephen said that a columnist for the New York Times had mentioned there should have been $1 trillion of funding through the CARES Act.
What are some other things that some of your clients, you're advising some of your clients to be looking out for as they go through this? Because obviously there's a lot of uncertainty around when we'll be able to go back to work, when the service economy kicks back in again. What can they be doing, right?
Yeah, that's a great question. I think that's a good closure. So, you know, I had, you know, prepared a lot of, like, luckily, my restaurant companies that we work with, we had moved a lot of their business to online ordering just to kind of follow best practices in the industry. I think you've got to be flexible in your business model. What I'm telling you, the catchphrase I'm using with my clients is they just need to survive, not thrive. So we are trying to be the last one standing, right? You know, we don't know how this is going to unwind. There's obviously some, you know, lots of theories on how we're going to get into stage 3 and stage 4 of this pandemic and start to get back to normal. But I'm advising my companies to just try to stay open and go. We've obviously cut all non-essential cost. We've looked at everything in the financials, and we're going down to bare bones, assuming that we're not going to get funding. And I think one of the best things I heard was early on in this pandemic, Mark Cuban was interviewed, and he said that, which really struck home, is that companies will be defined and their brands will be defined for decades on how they treat employees and customers during this. So, you know, what we're trying to do is just get people back employed. I mean, that's really the nature of this. You know, I think I would recommend the same approach. I mean, just try to survive through this. Be flexible in your business model. You know, as we were talking prior to this meeting, industries are going to dynamically change. I mean, this is shifting how people behave, how people work, how people you know, entertain themselves, how people do sports events. So be flexible, look for opportunities to leverage these changes, and do good during this. And there's obviously lots of horror stories of how companies are doing poorly. Like to see more stories around how people are doing well.
Yeah, that makes sense.
Yeah.
Well, that's super helpful. Thanks a lot, Chris. Again, this is put together by the Commercial Real Estate Professionals Network in San Francisco. We'll be doing many other panels like this. I hope this was helpful on various different topics. But we'll be sending some follow-up information so you can have some data, some of the stuff that Chris looked at. But really appreciate everybody's time today, and have a great. I guess we have a long weekend.
Yes, thank you. Thank you, everyone.
Actually, not the weekend anymore, but thanks everybody. I'm going to close the meeting out now.
Appreciate it. All right, bye, everyone.